is how can I differentiate between employer and employee contributions when depositing into the pre-tax account? So when one is making both pre-tax employee as well as pre-tax employer contributions, they can both be deposited into the same pre-tax solo 401k sub account. Now, when depositing into that pre-tax sub account, you can differentiate between employer and employer contributions based on the type of contribution being made. For example, employee contributions, which are also known as elective deferrals, those can be made up to 100% of net earnings from self-employment income. So in other words, 100% of your self-employment compensation, dollar for dollar, up to the limit, which is $23,000 for 2024, or an additional $7,500 if you're 50 or older. Now, in terms of employer profit sharing contributions, it's going to be a percentage of your self-employment compensation. And what your self-employment compensation is will depend on how your business is taxed. So for example, for a business that is taxed as a corporation, self-employment compensation is equal to the W-2 wages that you receive from the corporation. In this case, the employer contribution limit is 25% of your W-2 wages. Whereas if your business is taxed as a sole proprietorship, then your self-employment compensation would be equal to line 31 of Schedule C, in other words, your net income, less 1/2 of the self-employment tax. Of that figure, you can contribute 20% as an employer contribution. Now, that also is subject to the overall limit. In other words, the sum of the employee, employer, and/or any voluntary after-tax contributions cannot exceed the lesser of your self-employment compensation or the overall limit. For example, $69,000 for 2024, or $76,500 if you're 50 or older. But again, if those are both pre-tax employee and pre-tax employer contributions, they can both be deposited into the same account.